Hello friends, welcoming you all to the 6th edition of BCAS Text Gurukul. In this edition, we are going to cover updates and notification taken place in the month of November 2018. In India, the system of direct taxation has been in force from ancient times. The tax was introduced for the first time in year 1860, Indian Income Tax Act 1860, and further in 1918, 1922, and finally in 1961. The Income Tax Act 1961 was levied by the government. And therefore, considering the needs of the country, a task force was constituted in 17 wide press release dated 26th of November 2018 in partial modification of the earlier order. Government has appointed Shri Akhilesh Ranjan, Member Legislation CBDT, as the convener of task force. Other members of task force remains unchanged. The task force will submit its report to the government by February 2019. The next amendment is in relation to permanent account number. There is a change in Rule 114 and Serial number 6 of Form 49A and 49AA, wide notification number 82/2018, dated 19th of November 2018. The notification covers, in exercise of the powers conferred under Section 139A, read with Section 295 of the Income Tax Act 1961, CBDT hereby make rules called Income Tax 12th Amendment Rules 2018. It shall come into force from 5th of December 2018. If an assessee do not comply with Section 139A of the Act, then there is a penalty being levied under Section 271B amounting Rs 10,000. Therefore, it is very important to comply with the provision mentioned under PEN. There is a change in Rule 114, Sub-Rule 3 after Clause 4. Clause 5 and Clause 6 was proposed in Budget 2018, Finance Act 2018. The rule in respect of the same got notified on 19th of November 2018 and made applicable from 5th of December 2018. Now look to the Clause 5, the changes. In the case of a person being a resident other than an individual who enters into a financial transaction of an amount aggregating Rs 2,50,000 rupees or more in a financial year and which has not been allotted any permanent account number on or before 31st of May immediately following financial year have to apply for PEN. This clause is applicable only to resident. It is applicable only other than individual. It talks about financial transaction. Section 139A of the Income Tax Act do not define financial transaction. We have to refer to other provision of Income Tax Act or we have to refer to other laws, and in general parlance we have to find out the meaning of financial transaction. We have Section 285BA subsection 5 in Income Tax Act which talks about specified financial transaction. We have definition of financial transaction being given under FEMA, Foreign Exchange Management Act, and considering general parlance, we come to a view that any transaction involving finance which involves exchange of money, worth may be covered within the ambit of financial transaction. Its scope should not be restricted to revenue, income, expense items, but should also cover borrowings, lending, depositing, paying or receiving dividends. Since it involves money in bilateral transaction. Further, barter of gift is also included in financial transaction. Clause 5 uses word a financial transaction of an amount aggregating. It does not use financial transactions or transaction of an amount aggregating. Therefore, the intention of law is a financial transaction. They are focusing on word a. It means it emphasizes a financial transaction suggests single transaction as against more than one transaction. And the words amount aggregating suggest there is more than one transaction. We can take an example. A Limited purchases a machine for which consideration is payable in 10 installments of rupees 30,000 each. Therefore, in this case, single transaction exceeds 2,50,000 rupees, and therefore in this case SSC has to apply for PAN. Next example, if B Limited purchase 5 different machines from 5 vendors amounting 60,000 each. In this case, aggregate is exceeding, but single transaction is not exceeding. Therefore, in this matter, SSC is not required to obtain PAN. Next change is Rule 114, Sub-Rule 3, Clause 6. In the case of a person who is a managing director, trustee, partner, author, founder, karta, office bearer or principal officer of the person referred to in clause 5. Just now we have discussed about clause 5, that is covering transaction of 2,50,000 in case of assessee other than individual, or any person competent to act on behalf of a person referred to in clause 5 and who has not been allotted PAN on or before 31st May of the financial year. This clause covers natural person. Whether they are resident or non-resident, both are covered, which are connected to any entity mentioned in clause 5. Therefore, it means if any entity do not have any financial transaction during the financial year, then in that case all these people like director or trustee, they are not required to obtain PAN from Income Tax Department. Example, A Limited has 5 directors, 1 CEO and 1 managing director. Whether all have to take PAN? In liberal interpretation says yes, all have to apply for PAN. But if we will go for purposive interpretation, it is very difficult to say. The purpose is to link the financial transaction to an individual, and it is not clear whether the intention is to link it to all the other individuals who are able to enter into financial transaction. Next question arises is, who is a competent person? A person who has a power of attorney in a company or any employee, or a receptionist would be treated as competent person. Here we have to take a view that principle of adjusdum generis will apply, and the person competent to act on behalf of the company should be compared to director, CEO, that is senior management. Next. There is a change in Form 49A and 49AA of, in this serial number 6 has been substituted. The Income Tax Department has said that quoting of father's name is not mandatory in the cases where the mother of applicant is a single mother. Currently, father name is mandatory while making application for PAN. The new application forms have been substituted and they have allowed to quote the name of mother in the case of single mother or deceased father. The applicant applying for the PAN have to tick at the relevant section given in the form whether he would like to quote the name of her mother in the application or he would like to quote the name of father in the PAN card. If nothing is chosen by the SSC, in that case, department will take name of father in the PAN card. Further coming to the selected judgment in the month of November 2018. This judgment is of Cochin Tribunal in the case of MAJ Hospital versus DCIT, 100 Taxman 1. What are the facts of case? The SSC was a charitable trust registered under 12A of the Income Tax Act. The SSC was running an hospital along with the nursing school. Nursing school was located in hospital premises and students were getting training in the hospital and nursing school. With nursing school and the hospital were intricately connected with each other. SSC filed return of income declaring nil income after claiming exemption under section 11. Assessing officer treated income received from running hospital and business school as business activity and exemption under section 11 was denied. The AO denied depreciation to the SSC charitable trust on the assets the cost of which was allowed as application of income under section 11(1)(a). Aggrieved by the order of assessing officer, assessee went to appeal before CIT appeal. CIT appeal held that the assessee was entitled to exemption under section 11 in respect of income received from hospital, but the assessee is not eligible for the income received from nursing school. In regard to depreciation, CIT appeal confirmed the view taken by assessing officer. CIT appeal also raised penalty under section 271B of the Act in respect of non-audit of books of accounts by the SSC. The learned CIT appeal erred in coming to the finding that activities in the nursing school is only a business nature and therefore assessed under section 11(4) and 11(4)(a) of the IT Act, and also held that it is mandatory to carry out audit under section 44AB of the Income Tax Act. Aggrieved by the order of CIT appeals, assessee filed application to tribunal. The tribunal looked into the facts of the case. Tribunal observed that the main object of the trust is to render medical beliefs by running hospital. Article 4, subclause 4 of the trust deed authorizes the assessee to engage in any legitimate activity for the attainment of objects of the charitable organization. It is clear from Article 4, subclause 4 of the trust deed that carrying on the activity of nursing school is a part of the objects of assessee trust, and that both medical relief and education are charitable objects entitled to exemption under section 11 subsection 1. The hospital and nursing school are intricately connected and dependent on each other, and in fact are part inseparable activity. Tribunal has also observed that in case of depreciation, the trust will get the benefit of depreciation even in case the amount of asset has been treated as application till year 2015-16. After that, the law has been amended, and after that, if an assessee has claimed as depreciation as application, then he is not eligible to claim depreciation, and therefore tribunal gave in the favor of assessee, and assessee was eligible to get the benefit of exemption from nursing school as well. Next is decision of Mumbai Tribunal in case of Shushmita Sen versus ACIT 99 Taxman 252. What were the facts of the case? SEC has entered into an agreement with Coca-Cola India Limited CCIL, and SEC has made an agreement to undertake promotional, advertising, endorsement and marketing activities of CCIL for various products. In case of breach of contract by any of the SSC, then the person who is contradicting, he has to pay compensation. SSC, a resident individual, has received a total amount of 145 lakhs in lieu of settlement for breach of terms of celebrity engagement contract. However, on an amount of 50 lakhs, SSC has declared it as a revenue income and has paid taxes on it. But for the amount of 95 lakhs, SSC treated it as a capital receipt and therefore did not offer it as a for taxation. Then going into the intricacies of the case, this 95 lakhs was received by the SSC because of the harassment being done to her by an employee of CCIL, and therefore the case was opened and assessing officer has done scrutiny assessment under section 143(3) of the Income Tax Act. The assessing officer has disallowed and treated 95 lakhs as an income of the assessees and treated it as a revenue and said to pay tax on this. Then agreed by the decision of assessing officer, SEC went to CIT appeal. There the assessee was not able to show all the facts and show the documents, and therefore CIT appeal have also said that on 95 lakhs tax is payable. Aggrieved by the decision of CIT appeal, assessee went to tribunal. Tribunal has set aside the decision of CIT appeal and asked CIT appeal to reopen the matter and look into the facts of the case. Tribunal have said that The amount which is received by assessee 95 lakhs is in the nature of capital receipt and therefore it is not taxable under the Income Tax Act. The matter went in the favor of assessee. Next case is of Supreme Court in the case of Principal CIT versus State Bank of Patiala, 99 Taxman 286. What were the facts of the case? This decision is in regard to Section 14A of the Income Tax Act. We all are aware about 14A. Section 14A is a disallowance provision. This section provides that while computing total income of an assessee, no deduction will be permitted for the expenses incurred in relation to any income which is exempt from tax. The fact of the case where assessee having exempt income and assessing officer has calculated amount to be disallowed in regard to the expenditure incurred for earning exempted income. Assessing officer has disallowed expenses more than the amount of exempt income. Therefore, assessee got aggrieved by the decision of assessing officer and assessee went to CIT appeals. CIT appeals confirmed the addition made by assessing officer and CIT passed order under section 263 of the Act holding that the aforesaid assessment order to be erroneous and prejudicial to the interest of the revenue, and set aside the assessment order with a direction to enhance the income of the assessee on account of apportionment of expenses against exempted income under section 14A of the Act, read with rule 8D of the rules. Accordingly, order under section 143(3) read with 263 of the Act was made by the assessing officer. Aggrieved by the order of CIT appeals, assessee went before tribunal. The tribunal ordered that in this case, the assessee has an exempted income and the expenditure disallowed is more than the exempted income. Tribunal held decision in the favor of assessee and said that the expenditure to be disallowed cannot exceed the exempt income amount. The case went in favor of assessee. With this, it brings us to the conclusion of 6th edition of BCAS Tax Gurukul. I thank all the viewers. Let me take the occasion to wish you all Merry Christmas and a very Happy New Year 2019. May Santa brings lot many gifts for you in the form of happiness and success, and New Year will bring new opportunities for you. Thank you.